Today we'll be going over the NFT house that just sold recently for $175,000. I had originally sent out a tweet about this after reading it on a newsletter, and for some reason the tweet got a ton of traction. And we can discuss that a little bit later, but the main purpose of this spaces is just to kind of address some of the comments and concerns in the thread to give the companies a chance to talk about how they made this happen, what their plans are in the future, and just to answer a lot of the questions that came up in the thread. Um, so as we go on and as people kind of jump in, I will kind of back up and let the people that know a lot more about me, I'll let them answer some of the questions, and I'll just slowly moderate. Some of these, I'm already getting requests for people that want to ask a question, and that's great. I would just tell you that try to be brief, try to be concise about what you're asking. If there is any harassment or any bad words, you'll be kicked out and muted right away. This is not my first rodeo. I've done plenty of Twitter Spaces. I know trolls exist on here. I know exactly how that goes. So if that's your plan, probably go to a different Twitter Space because I'll just kick you out right away. And it looks to me like most of the companies are in here. I see Sanjay and I see the Origin Protocol jumping in, and so basically, I think I'll just get Sanjay up here, and we can kind of just talk about how this all started, what the plan is going forward, and everything. And if you guys don't know, give Sanjay a follow. He's the head of the Web3 initiatives at Roofstacks, so he's going to be able to answer a lot more questions than I am. I'm just kind of the moderator here. So jump up here, Sanjay, if you're listening, and unmute yourself.
Yeah, no, thank you so much for doing this space. Over the last couple of days, as you know, your tweet really created a viral phenomenon. The Web3 community has been so responsive and so positive about this first sale of the NFT property that we did on Friday last week. I'm also joined by by Jeff, who is co-leading this initiative with me at Roofstock. We have folks from Origin Protocol, which hosts our native marketplace. And then we also have, I see Jamal here from Wire. They provided the payment rails for our buyer to be able to convert fiat to crypto to purchase this property. And I think the Teller team is also joining. And Teller provided DeFi financing for this. So this property was purchased using financing on an NFT marketplace with USDC. And that's what makes this all really special, because for the first time, we were able to bring in the idea of smart contracts and programmable money, and with all the other participants, really make something magical happen with real world assets. I think this paves the way for the industry to move beyond just collectibles or PFPs to NFTs that have real world utility. So I want to thank all the partners who joined us in making this a successful sale. And we're here to answer all questions that people may have about the program itself, the structure, how we came up with this. As I've mentioned before, it took us 10 months of intense hard work with working with a variety of legal experts and tax experts to figure out how to actually make this sale happen on an NFT marketplace in 2 minutes. So the simplicity, even though we were able to achieve it, and it helps the Web3 community move forward tremendously. There's actually a huge Web2 company behind the scenes that's an expert in real estate. We've existed since 2015. Roofstock is a Series E company, most recently funded by SoftBank. And we have major investors backing us: Bain, Khosla, Lightspeed, etc. So there's a really big Web2 real estate company that's been specializing in single-family rental transactions for 7 years. And what we've done is, using Web3, get that last mile, which is, how do you make sure that the process of closing the transaction, which typically involves multiple intermediaries and takes several weeks, how do you bring that down to just a couple of minutes? and using the magic of smart contracts and programmable money, make it faster, cheaper, and more transparent. So with that introduction, Jeff, would you like to add anything? I think you can request to be a speaker. And
Yeah, no, I think you covered it all as far as the introduction goes, and let's open it up for questions. And we spent a lot of time responding to tweets and messages over the last couple of days, and this is an opportunity to dig deeper into anything that we've mentioned or raise new points, and we'll cover anything in real time.
Yep, sounds great. That was a great job explaining just exactly what's going on and how you guys got to where you're at today. And that some of the things you said about the 2 minute sale and the all online sale. That's exactly what what made this tweet go viral, and that's exactly what a lot of people are interested in asking about. So yeah, with that, I'll give the space to our first request here. Just it looks like a gmbrian.eth wants to jump up here. So go ahead and unmute yourself. And if you have a question, yeah, jump up to the stage and don't be afraid to ask. And whoever else has a question, go ahead and request. So Ryan, if you have anything, jump up. If not, we can kind of go to the next group and or the next question. If there's nobody else, I'll just keep kind of chatting here. I'm not sure if someone else requested by accident, but there was a couple of requests originally.
Hey, no, this is Ryan from the Teller team. I think Uday from the Teller team also requested to join. It's Tigu.
Okay, no problem. No problem at all. Now I kind of know who's who, and yeah, you guys can just kind of talk or answer questions whenever.
Ryan, do you want to say a few words? Yeah,
Yeah,
tell
I
us
think
more about.
we can do intros too. This deal was so exciting, and I can't believe how quickly it came together. We met Sanjay and Jeff at the Converge event, which was, I believe, 3 weeks ago in San Francisco, the Circle event. And we just brought up this idea that for this first property, if it was going to be purchased, can we take it to that next step and add in financing to the purchase of the property? And what you described, Rusty, where the property itself was purchased in one transaction, so in one block, in a 2 minute time span. We would love to get to a point where a user can attain financing in, I mean, 2 minutes is an amazing short period of time, but in a short period of time relative to the traditional world, and leverage that financing to purchase these properties through Roofstock. So this first property was purchased with financing. It was 65% loan to value. So on the 175,000 of that, around 62,000 was the down payment, and around 113,000 was the loan itself. I think something that's exciting for DeFi is this continues DeFi's narrative of over collateralization, safe and secure lending, but starts to bring value off on and off chain, kind of merging the two worlds together. And I think the beauty of DeFi is not only the speed at which financing can occur, but also the interest rate itself. If we look at Aave and Compound today, the cost of capital to borrow is floats between 0.5% to 2%. And if we compare that to the traditional world today, mortgage rates in the US alone are reaching north, like high sixes, and are touching 7%. And that's for an incredible qualified borrower. So I think it's going to be a really exciting time as DeFi starts entering the real estate market. And this is just the beginning. So that was me giving a little, maybe too long-winded of a story how this came together on our end, but excited to be here in chat.
no, Ryan, I think that's a great point. I would just want to add one more thing. I think the 30-year conventional fixed mortgage for a qualified buyer right now, as you pointed out, is approaching 7% APR. When the Fed increases interest rates again in November, which is extremely likely to happen, we will see conventional mortgage interest rates north of 7%. And with the while property prices may be coming down a little bit, debt to income ratio and credit qualification of borrowers is going to make it really hard to purchase properties in the traditional financing route. DeFi always has the promise that there's going to be fewer intermediaries, and a lot of that cost savings can be just passed on to the borrower. That's exactly what's happening here. When you talk about a conventional loan at 7%, if you look at a loan on a rental property, investment property, typically those go at 75 basis points to 150 basis points higher than conventional 30-year fixed loans. So you're already talking about an 8.5% loan, which is like hard money lending rates, right? This first loan that you guys did at 6% is already a couple of hundred basis points lower than TradFi. And we can keep working on getting that even better over time, where DeFi becomes the preferred way for rental property purchases to be done. Because why would you want to go through personal credit underwriting and wait 3 or 4 weeks to go and get a financing through a 30-year mortgage at a rate that's just incomprehensible, right? So I think this is the future, and I'm really glad this partnership came together to help pave the way for that to happen.
I compare it to how USDC enabled fiat related or denominated payments to happen instantaneously. The same way you just described that instantaneous feeling of buying property with financing on chain. And the competition for liquidity will increase over time, and that's going to bring down rates. Exactly as you mentioned, Sanjay.
Yeah, I think a lot of things you said there are very, very interesting. One of the main things is the timing. Yeah, the timing in the market seems like it could not be more perfect for you guys. With everything going crazy with the Fed rates and the interest rates just skyrocketing, I think it makes completely makes sense for an alternative, route to emerge, and that's exactly what we're seeing here.
Yeah, in times of economic disruption, people are willing to think out of the box. And the DeFi space has been building for a few years, the NFT space as well, and blockchain in general. Now we have stablecoins and some of the other primitives that we need. And so the way that we're thinking about this is over the next couple of years, we'll be building out this business model. Obviously, the sooner the better, but the idea is that if you take the NFT structure that we've developed and you pair it with a DeFi lending solution, it has that's going to look a lot different than the way that business is done right now. But we're going to emerge from that over the next couple years, which will be a period of transition. We'll emerge with basically DeFi being the preferred way of financing home purchases, and home purchases being transacted through blockchain as the preferred way of doing those as well. So, we're setting this up to basically be the next standard for the way these are transacted.
That completely makes sense. Completely makes sense to me. And if there are a few people that posted comments on the thread that aren't here, I think that's completely fine. I'll just kind of read as we get requests in. I'll just kind of read and ask you guys a few of the comments on the thread that got the most likes. And I think you guys just addressed this in your intro there. You were kind of chatting about it. But one of the main things that is repeated in the thread is what's the value that the LLC or the NFT adds to this process? And you guys hinted on that a little bit with the financialization, but is there anything else? I mean, obviously the speed and things like that, but can you expand on some of the value it adds by going this route?
Yeah, there's several aspects of this that we find very exciting, and I'll highlight a few, and others, please feel free to chime in as well. One of the earliest kind of validations we got was we have good friends in the crypto Web3 space that have all made money over the last couple of years through crypto, but they don't have any credit in the TradFi world. So they're worth seven figures, multi-seven figures in the crypto world. But when they go to Wells Fargo and say, "Can I open a bank account? Can I get a credit card? Can I apply for a mortgage?" Generally, they're not able to. Fars has a $2,000 credit limit on his credit card, and he's worth seven figures on the crypto world. And this anomaly is just mind-boggling because as I think Ryan pointed out earlier, programmable money and USDC and all that, I think the next generation will predominantly be buying and selling things using stable coins. We're not going to be seeing a world where people are going and putting their credit cards on Amazon and eBay and 20 other sites to do e-commerce transactions. They'll just connect their wallet and do their e-commerce transactions through that, right? So if that's the direction in which things are going, we need to have a way for these Web3 natives to be able to, diversify their holdings out of crypto while staying in the Web3 infrastructure without having to off-ramp to fiat, and be able to buy assets that can create multi-generational wealth, and real estate is one of those. So that itself was like one of the earliest leading kind of validators for us to pursue this as a business idea to explore further. But as we progressed, we saw all the other value as well. Like when you transact a traditional home on the MLS, there's 6% brokerage fees. There's about 1.5% of closing costs, and then a bunch of other kind of opportunity costs associated with getting the property ready and staged and et cetera, all that stuff. When you take a $200,000 property in Atlanta and you put a 6% commission on it, that's $12,000. Another 1.5% closing, you get to basically $15,000 now. Add some more opportunity cost, and you're getting very close to 10% of the value of the home. Is leaked. It just goes away through leakage to all the intermediaries involved in a real estate transaction. Doing it this way with an NFT through a marketplace, again, the sale that happened, the total fees that the seller had to pay was 3%. So it's less than half of what they would pay in a traditional MLS marketplace, and just that savings, when it can be shared between the buyer and seller, is advantageous to everybody, right? We want this Web3 economy where more savings can be passed on to the consumers and creators as opposed to large corporations and intermediaries. Beyond that, there are also other advantages, like when you sort of have this sort of NFT model that's used to purchase this asset, the asset itself is not in your individual name. So you do have the LLC as a liability blocker. Of course, you can do that in the traditional world as well, but then you have to involve lawyers and other intermediaries that make that harder, right? So there's those advantages as well. And there's Jeff, feel free to chime in and add all the other stuff, that's really useful here.
Yeah, I mean, making this asset class more accessible to everyone is a key part of what we've been doing at Roofstock for 7 years now. And this is just the next step in that. The whole point of using technology to open up single family rentals is to make it simple and more and democratize ownership. Obviously, it's a delightful experience to be able to purchase a property with one click. If you were using the typical VC metric, is it 10 times better than the existing solution? Yeah, it's 10 times better. That's awesome by itself. We have all of the cost savings that Sanjay mentioned, but even taking one step back, it promotes home ownership. It's easier to get into the market. It's easier to get out of the market. People know that if they have liquidity, if they have an easy way to sell their home, they'll be more inclined to buy it in the first place. And that's what we're trying to do, promote the concept of home ownership. And this is just one more lever that we can pull to make it easier to get into the housing market.
And just something I had not even thought about before, but it's just inherent to Web3, which I thought is important to share with everyone, is that Web3 is fundamentally so much more inclusive. And somebody had brought up a question or comment on Twitter earlier about how do you make sure that there's no discrimination, with these NFT sales. And the beauty of this is, unlike the traditional world where appraisers come to your house, and then if you're a person of color, we've seen these being reported so many times in major news articles that the property appraisal is down, and then like if it's and then they ask their white neighbors to come and stay at the house when the appraiser comes in, and the same appraisal comes up higher. You have all these kinds of inherent biases in the traditional world, but even though the buyer gets doxxed because of legal requirements to buy the asset, when they're purchasing the asset and they're connecting to an NFT marketplace, they're still doing that anonymously, because on OpenSea or LooksRare or the Origin marketplace, you're not, coming and signing up with your name and other information to get a login. You're just connecting your wallet anonymously. So it is such a much more inclusive way of doing business. And I think that promise of Web3, to Jeff's point, the democratization, the inclusiveness, there's an inherent beauty in doing these things with Web3 that isn't just a sort of an added benefit that I had not even thought about previously until I read that comment. It's very relevant. And it is a much more inclusive environment, and that's the beauty of Web3. And I think it's something we should all rejoice and acknowledge.
I would even extend that to credit. The concept of Web3 credit is now global, and it's no longer based on personal factors. It's based on more objective factors such as your activity on chain, the assets you hold, and that turns credit global, which is something that the Web2 economy has never seen, because credit today is fractionalized and limited to specific jurisdictions. So now that you have a global credit system and a global financial account system, it's amazing that now you can now purchase property globally. Anyone around the world can build up credit and leverage that on-chain credit to get access to these properties. And one thing you mentioned, Sanjay, why we're going to see more of this transaction activity come on chain in the next couple of years is because of that liquidation process. The fact that you can foreclose or sell a property in a matter of hours rather than a matter of months to potentially years in the traditional world is one of those big turn-ons for moving the asset on chain and enabling financing behind it. So when you think of a lender coming into the position of helping finance one of these properties, if the borrower fails to repay and the home needs to be foreclosed on, that is simply a liquidation process at the smart contract level. If that borrower defaults, then the NFT can be taken by the lender, and the lender can then sell it on an open marketplace. In the traditional world, that would take at minimum 6 months to foreclose on the property itself. So
Yeah,
we're going
and
to.
that's sorry, I just want to add one thing. It's a very good point Ryan brings up, but I do want to point out that we're talking about investment properties here, not owner occupied properties. We're not talking about foreclosing somebody in a home where they're living, in minutes and then like asking them to leave the house, right? That's a different world. In the traditional finance world, there's no, it's the same asset class, but all of TradFi rails were built for owner occupancy, and we've just force fit rental properties into the same mortgage process. So to Ryan's point, if it's a rental property where the borrower stops paying interest or principal, the foreclosure process takes a year or 2 years, depending on whether it's a judicial or non-judicial state and all that. However, if you look at it, a rental property as an asset, just like your cryptocurrency against which you've taken over collateralized lending, you can basically take possession of that NFT and sell it on a marketplace and recoup your principal much faster, easier, cheaper in DeFi than you can with TradFi, right? So I just wanted to clarify that.
And just to put a final point on that, in the event that the home token is liquidated or resold to another owner, and there's a lease in place, that owner would still have to respect that lease. So we're not talking about kicking tenants out. There's no eviction. And I'd say another benefit of this model in general, not just the Web3 incarnation, is being really clear that if the owner changes, it doesn't mean that that has any impact on the tenant at all, right? So the tenant is safe, the lease is in place, and it has to be respected. And whether the ownership is owned by me, the home is owned by me or Sanjay, it doesn't matter at all to the tenant.
Great. No, I think all of that completely makes sense. You're just simplifying the process and making it, available to a lot more people, just like Web3 does with a number of different things. Just to kind of highlight some of the things that you said, I just went through the house buying process myself, and just like many people in our circle, had some Bitcoin, some cryptocurrency that I wanted to cash out, and it was virtually impossible to do. They didn't have any of the stuff in place. They didn't know, they didn't even know what they were looking at. So we had to basically change up the entire way that we bought the house. So I think this is very attractive to someone like me or someone like us that's in this crypto circle or has been for so long. Just kind of moving on here, I think some of the comments, some of the main comments are or jokes are, oh, someone hacks my wallet and now they have my house. Someone puts in the wrong seed, puts out their seed phrase, and now someone has their house. Can you guys speak to a little bit about the security and how that works, if it's a multi-sig wallet, and all the details there?
Sure. So the way that we've set this up, in order to purchase the home token, you have to have already gone through an onboarding process with us. And as part of that onboarding process, you will mint a membership token. That token is a soulbound token or a non-transferable token, and it's associated with your real world identity. So there is a KYC step that happens in less than a minute. It's very streamlined, but in order to purchase this property, we're just following the law here. If you own an LLC in the U.S., then we need to know who you are. So the upshot of that, for security purposes, is that if my wallet is hacked and someone is trying to take that home token from my wallet, they can only transfer it to their wallet if their wallet has already been onboarded through our system. In other words, we will know the identity of the person who owns the wallet that's transferred to. So it's a very unlikely situation that someone would try to steal the home token if they've already been identified. So it's not anonymous. But even in case that did happen, someone goes through our KYC, they get approved to be a buyer or an owner of the token, and then somehow they hack and they steal it. We also have the ability to deplatform a token and issue a replacement to the true owner. So in both cases, the typical risk that you associate with cryptocurrency of, oh my God, my keys were compromised and someone cleared out my wallet, I have no recourse, this is all anonymous. That doesn't exist in the system that we've set up.
Yeah, I wanted to add a couple more points. So because this SBT is required with the verified buyer flag on it, the typical phishing scams don't apply to this particular product, because somebody without that SBT and that flag can never just impersonate some website and try to get you to connect your wallet and steal that token, right? Because that transfer will actually fail. It's built into our smart contract. And the second thing is, if for some reason, you just lost the phrases or keys to your wallet, or you misplaced your ledger and can't find it, those are the instances where you can prove your identity to us. And because we know that you're the owner of the LLC, we can deplatform that prior token, as Jeff said, and get your new wallet approved with the SBT and issue a new token to that wallet.
And as an additional point to that, this is that I do the credit piece from Teller. As an additional security detail, if you have a home financing available on this property, then ideally the way it is set up is the user cannot just transfer tokens easily. You need 2 out of the 3 people. So 3 people that need to sign is the borrower, the lender, and the pool owner where this loan has taken place. So 2 out of the 3 people have to ideally sign for any transfer of the NFT to happen. So this is there are a couple of additional securities that are added in, which makes it almost next to unhackable, I would say.
Hey, this is Linus from Origin Protocol. We've been partnering with Roofstock for a while on this, and we helped to build the marketplace product for them. And what I was floored with when the Roofstock team came to us with this idea that they've been working on for a long time was just how thoughtful they were about just wanting to be open, full-on Web3, compatible with industry standards, yet at the same time bridging that difficult part of real-world laws, real-world property transactions, thinking about things like KYC, thinking about things like security, that quite frankly, we're still solving in the Web3 world. And so this is just a bridge extending upon the ERC 721 a NFT standard, but thinking about what are the modifications that would make sense in this case that would protect customers, but would also make this fully compliant with real world laws. And on top of that, this is something that can, in theory, be transferred and sold on any NFT marketplace. But when thinking about all of these additional intricacies, it really did make sense to think about you're going to have to build a better experience, a bespoke marketplace that makes sense, and that's what Origin kind of worked with Roofstock to do. And it's sort of, I think that when we think about additional use cases for NFTs that can be unlocked beyond JPEGs and PFPs, people are gonna be thinking about how can I build on top of additional standards and think about better experiences, vertical experiences, more secure experiences that the current generation of generalized marketplaces for kind of flipping JPEGs don't currently serve. But I think Roofstock is doing a fantastic job of building on top and paving the way for how we can modify these use cases to make it more secure for different use cases. So it's been a phenomenal ride to partner with this team.
Thank you, Linus. And we deeply, deeply appreciate the partnership with Origin as well. You guys have been phenomenal throughout this entire process. One thing I wanted to add was we, as Linus pointed out, we want to be as close to Web3 as possible, but we also want our structure and platform and kind of the thinking behind that available to the Web3 community to either adopt and bring other real world use cases, to Web3, or fork and improve what we've done, and use this as a starting point, because we've spent a lot of time and a lot of money trying to come up with this structure and make it legally the right structure and compliant structure. So a lot of other Web3 companies can sort of piggyback on the work that's already been done and extend and expand what we've done to bring in other real world use cases.
Great. I think that's extremely helpful. Along with all the trolls that are in the comments of the viral post, there are a lot of people that have commented saying and realizing that this is the future use of NFTs. It's profile pics and trading, things like that, where it was just a kind of a way to get started. But with things like this, real world use cases, you can kind of see where NFTs go and which other industries they kind of infiltrate from here on out. And I'm kind of in that boat for sure, as seeing the future use cases for this. And just going back to a few of the Twitter comments that got the most likes and that people were the most concerned with. You mentioned you're definitely buying the LLC as opposed to the real property. Some of the people were wondering how and when does the membership transfer occur if you're purchasing the LLC?
Yeah, that the membership transfer occurs at the time that the smart contract executes. So if I'm the buyer and I press buy and the seller agrees, and the smart contract executes, once that NFT is in my wallet, ownership is transferred. And the way that we achieve that, there's a little bit of legal finesse that's involved there, which we're happy to go into. And of course, all of the documents are available in our data room. But the LLC operating agreement is drafted in a way that the owner of the LLC, the person that owns the membership interest of the LLC, is that person who owns the wallet where the token resides. So legally, the way that works is we're listening to the chain. When we see that the home token has transferred from one wallet to another, that action on chain is an instruction to the LLC to update its membership record, its ownership records to reflect the new owner. And that's it. So that happens automatically. We actually don't need to be involved by virtue of the way that the legal documents have been set up. When the transaction happens on chain, that the LLC automatically updates its ownership records, and whoever's purchased that new token is the owner.
And just for the benefit of listeners who may not know Jeff, Jeff is a lawyer by trade. He's practiced securities law in big law firms and has also been GC in fintech companies. Prior to co-leading this Web3 initiative with me at Roofstock, Jeff was the general counsel of Roofstock for about 2 years. So he lives and breathes legal stuff, and so that's why this worked out really well, because we've really worked with both our internal legal team as well as at least a half a dozen different outside law firms that were involved in various aspects of real estate law, commercial law, securities law, tax, 50 state analyses on state and local taxes, transfer taxes. All of that work was done over the last 10 months. And that's the heavy lifting really here. Of course, none of this would have been possible if we did not have the wonderful partners, Origin, Wire, Teller, all come together. And of course, if USDC being there, and then this particular loan was done with Matic USDC on Polygon. So there's a lot of infrastructure that needed to be true to make this happen. But fortunately, the kind of Ethereum world has progressed enough that we have all these pieces in place now that it's easy for companies like Roofstock. Let me not say easy, but it's easier for companies like Roofstock to now come in and use this existing infrastructure to build these types of amazing Web3 applications.
Yeah, 100%. Yep, it sounds like Jeff's a great guy to have on the team, and it seems like you guys have a ton of great people, working on this and have thought out every detail, which is super important. And that's exactly why this tweet got so many impressions. Is people were concerned and people had worries, and people thought, "Oh, this will never work," and other people thought, "Yes, this will absolutely work." I guess going into just a few more of the kind of the real world details that might not be present in a deal with the NFT, in place. Can you speak a little bit about like that? Is the title company? Is it that probably not needed? Insurance? Can you talk a little bit about that? About obviously like an inspection, some of the traditional things that you would go through when you're buying a house, the traditional way, as opposed to using Roofstock and going the NFT route.
Yeah, I'll start this off and then let Jeff explain further. So some of the things you have to still have in a Web3 transaction, and those just get abstracted away. And for example, you do want to have a recent inspection because you want the buyer to be able to see the most current information about the property. We want to remove as much data asymmetry between the seller and buyer, right? So you do want to have that recent inspection. You do want to make sure property taxes have been paid, insurance is current, HOA is current. You do want to make sure those types of issues have been solved. So those are just done ahead of time and put in a data room so that the buyer can do the diligence essentially as a desktop underwriting by sitting at their computer, reviewing all the documents, ingesting the information. If they have to run it through an Excel calculator to do their own financial modeling, yes, they can do all of that beforehand. What we have really solved is at the point of sale, instead of it taking 3 or 4 weeks, bringing that down to the couple of minutes, right? There are still a few things like we want to have a preliminary title search to make sure there's no liens or encumbrances. So we do that ahead of time before the property is listed. And so there's, those types of things are done ahead of time. But what gets taken away from this transaction is the traditional intermediaries involved in the closing process. So there's no seller's agent, no buyer's agent, etc. But I'll let Jeff go into more details on that.
Yeah, I mean, really, the way that we see this is Roofstock has 7 years in this space. We are deeply integrated into the real estate space, and there's a lot of knowledge and contacts and know-how that we've been able to leverage in putting this product together. So the title is an example. Theoretically, once this property has been titled into the LLC, that LLC can be sold 100 times, and that wouldn't create any additional title risk because no title has changed. Title hasn't been re-recorded or changed hands. But we understand that everyone is used to buying properties with title insurance, and when the next buyer buys this token, they're probably going to want to have title insurance. And finding a title insurer that is willing to work with crypto in this way is non-trivial. Of all of the title insurers that we know in our ecosystem, which is dozens, there was precisely one that was willing to engage and kind of think about this out of the box and work with us to bring this concept to life. So I think that's part of the advantage and actually absolutely critical building blocks in putting this product together is having the real world real estate experience to know how to get this stuff done. So title, to answer the question, title is still there. Obviously, title insurance goes along with it. Property insurance has to be there. Similarly, we've worked with a property insurer that's tech forward. They're willing to think out of the box. They're willing to be creative, and because of that, we're able to offer property insurance as part of this program. So I think the real estate expertise is another part of what allows this product to be a fully functioning substitute for the way things are currently done.
Oh, that's interesting, and I think that was very well put. So basically, all of the traditional things are still there. They're just a lot easier to get through and a lot more convenient. Um, Yeah, I think you did a good job covering that, and we're getting through a lot of these questions that a lot of the people in the comments had. All right, a couple of the more nuanced questions were we got through. It's the LLC that gets transferred. A couple of people have brought up if the LLC owns the property and the LLC is tokenized, does that become a security? And does the SEC get involved at that point, or how does that work?
Great question. Absolutely top of our minds as well. And that's been a lot of the legal expense and the blood, sweat, and tears that Sanjay was referring to earlier has gone into making sure that we're fully compliant. I mean, with securities laws and every other law, but securities laws in particular, the way that we see this is there are fractionalized real estate products that involve tokens. And if you're splitting up the ownership into fractional interests, it's very hard to avoid being a security in the US. And that's part of the reason that we're not doing that. In our case, we have one home, one LLC, and one token holder. And the way that we see this, and this has been validated by numerous outside counsels, is if you're the token holder, you own the right to manage the property and do whatever you want with the property. So this is not a typical situation that would require the protection of the securities laws. The securities laws are there to make sure that if I'm giving my money to a third party who says that they're going to manage my money and create some returns for me, that's the situation where the SEC feels like disclosure is necessary. I need to be protected because I need to know who that third party is, what they're going to do with my money, and they have to have audited financials and all of that stuff that goes with being a registered security. In our case, what we're talking about is owning a home. And yes, you can rent it out, and there may be returns, right? That's an objective. But whether you get returns depends on the choices that you make as the owner. So if you want it to be a short-term rental and put it on Airbnb, you can do that, and you'll have a certain level of returns. And if you want to make it a long-term rental, you can do that as well. And if it's a long-term rental, you could hire a third-party property manager. You could manage it yourself. In either case, all of the key decisions about how money is spent on the property and how much money the property produces, those are made by the token holder, him or herself. So if I want to say I'm going to do a $30,000 renovation on my house before I tenant it because I want to make sure that all of the major repairs have been done and I'm not going to have very much CapEx over the next few years, I can make that decision. Or if I want to do it a different way, I make that decision as well. So we have looked at the securities laws very carefully. We know that, rightfully so, securities regulators at the national and state level are looking carefully at crypto and NFTs and all of that stuff. This is not a case where the securities laws are required because, as I said, the owner has total control over the asset, and they also have total information. So there really isn't any other disclosure that we could provide that they don't already have.
Completely makes sense. That was very, very well explained. I think that answered a lot of questions that were in the thread regarding a lot of those things and the tokenization of an LLC, which honestly I didn't know a lot of that. So that's very illuminating, and like I said, it completely makes sense. I'm still working through some of the questions, and I think that Sanjay did a good job of getting through a lot of these comments. It seems like he answered a bunch of the questions that people have. But yeah, this is it. When I find something like this, I'm just like anything else, just extremely fascinated. It seems like it really is a kind of a milestone for Web3, kind of really giving people an example of what Web3 and what NFTs can be used for, aside from profile pics and pictures of apes and things like that they get a lot of negative recognition for. So I think we've really covered a lot of this stuff. If you guys can think of anything else or want to comment on a few of the things that we've gone over, definitely jump up and and go ahead. But I think this was a great space, and I think we pretty much covered about everything, unless you guys can think of anything.
No,
I just want to add.
yeah, please go ahead. Yeah.
Oh, sorry. Yeah, I was just going to add one thing, Sanjay, is
Sure.
that being creator in residence at Origin and just seeing this partnership come to fruition alongside having purchased my first home in the past year, it's just amazing that this innovation is coming, because the home buying process, the opacity in it right now is so apparent to anybody who's gone through it, let alone for your first time. And I think the innovation, the partnership between Roofstock and just Origin to change this in real time and make NFTs more than just PFPs is just really exciting, both on a personal and professional level. So just kudos to everyone here, and I'm excited for what this may mean for the future of everything we're trying to build here.
No, thank you. We feel the same way. I was going to ask if either Wire or Teller had any other closing thoughts as well. But from my perspective, the just amazing response from the Web3 community has been such a great validation. And while Jeff and I have been literally spending every waking hour, and that's in the last couple of days, trying to get through all the Twitter comments and questions, I'm sure we've missed some, and there's still other unanswered stuff. And it's not that we don't want to answer those questions. It's just we're trying to get through them as quickly as possible. So we do appreciate, if there's some questions that have not been answered, please hit us up on. You guys have our ETH handles. We're fully doxed. Please hit us up, and we'll try to get through those Q&A in a sort of reasonable time frame. But also appreciate your patience, because it's been a tremendous couple of days, and we're doing our best to keep up with all the comments.
I wanted to shout out Sanjay and Jeff. I've been seeing Sanjay just all up in all the comments, and this must have been a super heroic effort. So thank you. Any sort of new innovation in technology will have its share of questions and skeptics, and that's what we're here for, education, and just Sanjay setting the example of just responding to every question, including trollish type comments. So appreciate the hard work that you're doing there.
Completely agreed.
Taylor is just happy to be part of the financing aspect of this. We have been flooded by so many borrowers now who want to do something similar. We've been playing catch up ever since the news broke out, and we are just happy that we've collaborated in this and want to take it bigger and higher.
There were I'll sign with this. There was over 4 trillion, I believe, in mortgages in 2021. Well, that probably dropped this year. I can really see DeFi and real estate being DeFi's killer app, and the folks on this team, Origin, Roofstock, Wire, Teller, I think we're all coming together to make it happen. Future of DeFi is here, and the future of NFTs too.
I agree completely. Yep. I think all of the comments are great. And just chatting with the teams from each company, it's very, very clear to me that you guys have some awesome talent and clearly know what you want to do and which direction you want to take this. And the conviction is completely strong. I'm all in. So it was great to chat with you guys and to illuminate some of these details. And I'm ready to purchase my next house through the Web3 for sure. So thank you guys. Kind of some parting words. I'll just open the floor up, and you guys can say goodbye, and I'll just kind of end it whenever we're done. So thanks a lot, guys. Cheers.
Thank you.
Thank you. Thanks so much.
Thanks, everyone.
Thanks, guys.
Thanks, guys.